Well, it was another rally day on Wall Street today. The Dow and the S&P have now recorded their best two-day gains since January. Enthusiasm from yesterday carried over to today as investors appeared even more confident that the Federal Reserve will cut interest rates sometime this year. Tech shares rose, so did the interest rate-sensitive utility and real estate sectors. And with U.S. and Mexican officials talking today, some of the concerns over trade that had rattled investors last week were put on the back burner today, and we'll have more on that in just a few minutes. In the meantime, the Dow gained another 207 points, as you see, to 25,539. The Nasdaq was up 48. The S&P added 22.
And stocks rose despite mixed reports on the economy. Job creation in the private sector hit a 9-year low. According to the payroll processor ADP, businesses added just 27,000 jobs in May. The forecasts were for 175,000. A separate report, however, points to a strengthening services sector, which makes up the bulk of economic activity. The Institute for Supply Management reports an uptick in activity helped by gains in new orders. And that pickup in activity was echoed by the Federal Reserve's Beige book, which is an anecdotal look at the economy across the country. Ylan Mui reports tonight from the central bank.
The Federal Reserve said that economic activity was modest this spring, and that's a little bit better than the preceding period. Almost all 12 Fed districts reported at least some economic growth, and some even enjoyed moderate gains. Only one district, St. Louis, said that economic activity was unchanged. Nationally, employment was about the same as last time. Most districts reported modest to moderate job growth, but the tight labor market remains a constraint. The Fed did find that there was increasing wage pressure and improved benefits across a range of occupations. Meanwhile, the Fed said that prices rose at a modest pace. And as for tariffs and trade uncertainty, there were lots of interesting anecdotes out of Boston and Dallas in particular. In Boston, the report called out Huawei and the impact on semiconductor firms. It also said that trade uncertainty is causing delays of new models in the auto industry. Meanwhile, over in Dallas, manufacturers, retailers, and the service sector, they all pointed to tariffs as concerns for price increases and for demand. And some companies said that long delays at the Mexican border were adding to their transportation costs. Overall, consumer spending was generally positive, and real estate and loan demand, they both pointed toward growth. The Fed said that the outlook for the coming months was modest, but solidly positive. However, I will point out that that forecast was made before the recent flare-up with Mexico. For Nightly Business Report, I'm Ylan Mui in Washington.